Imagine a world where money isn't controlled by any government or bank, where you can send funds across the globe in seconds 24/7 with minimal fees. Sounds futuristic? It's already here. Welcome to the world of cryptocurrency. In the next 20 minutes, I'll guide you through what crypto is, how it works, its pros and cons, and what to watch out for if you're curious about investing or simply want to understand this revolution. Cryptocurrency has quickly evolved from a niche experiment into one of the most talked about financial innovations of our time. Imagine a world where you can send value anywhere on the planet in seconds, without the need for a bank, a government, or an intermediary of any kind. That vision is no longer science fiction, it is the reality created by cryptocurrency. Over the next 20 minutes we will explore what crypto actually is, how the underlying technology works, why so many people believe it represents the future of money, and why others remain cautious. By the end you will have a clear understanding of this fast-moving space, whether you plan to invest, build a career in the field, or simply satisfy your curiosity. At its core, cryptocurrency is digital money secured by cryptography and built on a technology called the blockchain. Unlike dollars, euros, or rupees, no central authority such as a government or central bank controls it. Instead, thousands of independent computers around the world keep identical copies of a public ledger, a kind of shared database that records every transaction ever made. This means there is no single point of failure and no one entity that can shut the system down. The idea was first realized in 2009 when a mysterious figure known only by the pseudonym Satoshi Nakamoto released Bitcoin, a peer-to-peer electronic cash system. Bitcoin's breakthrough was the combination of mathematics, computer science, and economic incentives to create a currency that people could trust without trusting each other or any central institution. In the years that followed, thousands of alternative coins, often called altcoins, emerged to build on or compete with Bitcoin. Some, like Ethereum, introduce programmable smart contracts that allow decentralized applications to run without a central server, while others experimented with faster transaction speeds, different security methods, or unique use cases. To understand why all of this works, we need to look more closely at the blockchain itself. Picture a never-ending chain of blocks, each block a bundle of transactions verified by a network of participants. Every block is cryptographically linked to the one before it, creating a timeline that cannot be altered without rewriting every subsequent block, a task so computationally expensive that it is virtually impossible. In Bitcoin's proof-of-work model, powerful computers known as miners compete to solve complex mathematical puzzles. The first to solve the puzzle earns the right to add the next block to the chain and receives a reward in newly minted coins. This process not only secures the network but also issues new currency in a predictable way. Other networks, such as Ethereum after its major upgrade, use proof of stake, where validators lock up a portion of their coins as collateral and are randomly chosen to confirm transactions. This method dramatically reduces the energy required to maintain the network, a key improvement as environmental concerns grow. Within the vast universe of cryptocurrency, a few key players stand out. Bitcoin remains the largest and most recognized, often described as digital gold because many investors treat it as a store of value and a hedge against inflation. Ethereum is equally influential, serving as the backbone for decentralized finance platforms, NFT marketplaces, and countless blockchain applications. Stablecoins such as USDT or USDC are designed to maintain a one-to-one value with traditional currencies like the U.S. dollar, offering a way to move money quickly without exposure to the extreme volatility that other coins experience. Beyond these, thousands of utility tokens power specific projects, while so-called meme coins such as Dogecoin or Shiba Inu attract attention more for their community energy and internet culture than for any technical innovation. This diversity shows that cryptocurrency is not a single invention but an ecosystem of experiments exploring how value and trust can be managed online. Supporters of cryptocurrency point to several compelling advantages. First is decentralization. No government can freeze a Bitcoin wallet or manipulate its supply on a whim. Transactions cross borders in minutes and settle without the delays or fees of traditional banking. Many coins have built-in scarcity. Bitcoin, for example, will never exceed 21 million coins, which some see as protection against inflation. Perhaps most exciting is the wave of innovation built on these foundations. Smart contracts enable decentralized lending and borrowing, tokenized assets, and even entire virtual worlds where ownership is recorded on the blockchain. Artists can sell digital creations as NFTs and receive royalties automatically. Gamers can earn tokens that hold real-world value. For many enthusiasts, cryptocurrency is not just money but the infrastructure of a new, open internet. Yet no technology is without risk, and cryptocurrency is no exception. Prices can be breathtakingly volatile, fortunes can be made or lost in hours. While the blockchain itself is secure, exchanges and online wallets have been hacked, costing users billions of dollars. Regulation remains a gray area in many countries, creating uncertainty about how governments will tax or restrict crypto in the future. Scams, so-called rug pulls, and worthless copycat coins are common, preying on newcomers who fail to research before investing. Energy consumption, especially with proof-of-work networks, has drawn criticism for its environmental impact, though newer systems are making strides in efficiency. Understanding these challenges is essential before putting any money into the market. For those who remain interested after weighing the risks, the path to getting started begins with education. Learn the basic terminology: wallets, private keys, gas fees, and decentralized exchanges. Choose a reputable trading platform. Include Coinbase, Kraken, or Binance, and always check what is legal and available in your country. Consider how you will store your coins. A hot wallet connected to the internet offers convenience but is more exposed to hackers, while a cold wallet such as a hardware device keeps your keys offline and far safer. Many investors use a dollar-cost averaging strategy, buying small amounts at regular intervals to smooth out price swings. Above all, never invest money you cannot afford to lose. Treat crypto as a high-risk, high-reward asset within a diversified financial plan, not as a guaranteed ticket to wealth. Looking ahead, the future of cryptocurrency remains an open question, but the trend toward digitization of value is unmistakable. Central banks around the world are exploring their own digital currencies, known as BDX, which could blend the convenience of crypto with government oversight. Major corporations and financial institutions are integrating blockchain technology for supply chain management, cross-border payments, and secure record-keeping. The emerging concept of Web3 envisions a decentralized internet where users own their data and digital identities, powered by crypto tokens. Virtual worlds and metaverse projects are building economies that exist entirely online, where digital goods and services can be bought and sold with cryptocurrency. Meanwhile, the industry continues to innovate on environmental concerns, with many networks adopting energy-efficient proof-of-stake and exploring carbon-neutral solutions. In the end, cryptocurrency is neither a passing fad nor a guaranteed revolution. It is a powerful new tool whose impact will depend on how people choose to use it. For some, it represents financial freedom and technological progress. For others, it remains too risky, too unregulated, or simply too complex. Whatever your perspective, understanding how crypto works and why it inspires both excitement and skepticism places you ahead of the curve in a world where digital finance is becoming impossible to ignore. Whether you decide to invest, build, or simply observe, the knowledge you gain today will help you navigate tomorrow's economy with confidence.